Yo, yo, yo. What's the dealio, y'all? What's the dealio, man? Hey, y'all know what time it is, right? We got the masterclass popping. Let's get it, man. We gonna talk about a lot of good stuff. I'm gonna give you guys a lot of nuanced information that's gonna turn you up. You know what I'm saying? So tap in with me. Let me know where y'all tuning in from. Let me know who all here, man. Let me know. Talk to me, man. Let's get this video right here to 500 likes, all right? This masterclass is free. It's going to be recorded, right? Let's get this video right here to 500 likes, y'all, okay? And let me say this right here. The only thing that I'm asking for you guys is actually to engage with what I'm saying, all right? Engage in this live. Don't just be watching it passively, all right? Engage. Let me know what's going on. Let me know y'all hear what I'm saying, right? So, what up, y'all? Tap in, like this video, subscribe to the channel. You know what I mean? Let's see what we got. Let's see what we got. KDH, what up? What's up, what's up? Tish in the building. Jay Skrilla, Country Skrilla. Marquin, what up? Double R, Kelton. Wise, what up? What's up, Pam? Forever Free. What's up, Marie? Keisha. What up, Ash? QTZ. What up, Tim? Daphne in the building. No Extendo. What up? What's up, Chaos? Hey. That's what I'm doing it for right now. Help y'all out, man. Miss Fruitful. I said QTZ already. QTZ in the building. Day one. What up, Kent? India. Jason Williamson. What up? Dr. Natalie. Asar. Christiana. What's up? Kelton. I got your Saturday sweater on. I see you. Hey, I appreciate it, Keisha. You know what I mean? Option Strike Force, Jason Williamson. What up, Tiff? Chandra. What up, Davita? Miss Fruitful. So let's get it started. Let's get it cracking, man. What up, Sneaker Girl? What up, Ant? Jerry. IWM Juice on standby. What up, Stu? What up, Mimi? Let's go. Yeah, I got the masterclass juice right here. You know what I'm saying? I got the masterclass juice. I got the water right here. You know what I'm saying? Just because this is a different little vibe. You know what I mean? This is a different little vibe. So I gotta switch it up a little bit. You know what I'm saying? What up, Angie? What up, Terry? Chandra P. Shout out to Houston. You see how hey, yeah, nah, Stu, you killed Netflix. Shout out to Netflix. That was a good one. What up, Apostle? Cali Chick. What up, Doc? All right, y'all. What up, Johnny? All right, man. So listen, if y'all are here, if y'all watching, be sure to like this video, all right? Let's make sure we get this video to 500 likes. Let me know where y'all tapping in and tuning in from, okay? What up, Baby Buffett? Hoodie Black. What up, Travis, KP? Listen, so what we're going to talk about, we're going to talk about a lot of stuff today. Obviously, we're going to talk about options. We're going to help you guys, break through and get a lot of little, nuanced questions answered, okay? So I know what I want to focus on. I know what you guys been asking about. So yeah, we're going to get it cracking. We're going to get it started. Now, what I will say is, you guys got to trust the process of when I'm on these lives, okay? So what I mean when I say that is, don't just be asking these random questions. Like, you need to follow along with what I'm saying, because I do things systematically and methodically, all right? This is a process, you know what I'm saying? So it's like, make sure y'all tap in, make sure y'all follow along, okay? Don't just pop in and be asking some random questions. And also, we are not talking about no stock setups, okay? This is focused on actually skilling yourself up. We're not talking about setups today. We talk about setups every other day. All right? So this right here is to focus on actually getting better, right, in the actual craft of what it is and helping y'all with y'all understanding and y'all execution. Okay? So I just want to make sure that we clear there. All right, we got a little housekeeping. Okay, what's up, Casey? Nothing that I say in this video is financial advice. If you guys want financial advice, be sure to go talk to a licensed financial advisor. Okay? Seriously. All right, y'all. So we're going to talk about the strat method, obviously. A lot of things about the contracts, okay? A lot of things about contracts, a lot of things about the options chain, scaling in and out of trades as well. All right? Things like that. Pre-market prep, somebody asked about that. So a lot of questions that you guys put in the the live a couple days ago. I wrote those down, and so that's what we're gonna focus on. All right. So next up, right? Like I say, the only thing I ask is for your undivided attention. All right. You're not going to get what you want to get if you over there watching TV, watching this, right? Watching something else, doing something else, right? Make sure you lock in, okay? You owe this to yourself. All right, make sure you lock in, make sure you focus. All right, I can't stress this enough. All right, and always remember, how you do anything is how you do everything. So if you don't know how to focus on watching something right here, then that's why in the market you don't be focused and you be missing out on stuff. Y'all see what I'm saying? So keep all of these things in mind, y'all. All right. Be sure to like this video. Okay. Also, share this with somebody you know in the market, right? So that they can elevate their game. Okay. So let's see. What's up, Black Pearl? What's up, Devonna? I'm on a big screen. I appreciate that, Davita. What up, Dar? All right. So, first thing we're going to talk about, y'all. All right. And sometimes some stuff may seem like, oh, I knew that already. But I still want you to listen, because what happens is there's gaps that can get filled for you mentally, right? So, first thing that we're going to focus on and we're going to talk about is, what's up, SD Scott? First thing we're going to talk about is, contracts, okay? Contracts. And also, you guys asked about the Greeks. All right? What up, Adam? How we feeling? You guys asked about the Greeks, but also contracts. But even more than the contracts, your options chain. Because what I've learned is a lot of people that start trading options, all they know is what somebody tells them, okay? All they know is this strike price and that's it. But they don't know what the options chain looks like. They don't understand how to navigate it. They don't know how to understand what the options chain is telling them, okay? So we're gonna start there, and then we're gonna dive in a little bit deeper, all right? We're gonna talk about scaling in and out of contracts as well, right? Because that is an important thing also, okay? So make sure you guys are focused. Y'all got y'all notepad, all right? And let's make sure that we also apply this week, okay? Now, before we go into that, let's talk about next week really quick. And like I said, I'm not talking about no setups, all right? I'm not talking about no setups. All I'm talking about is, actual the craft, okay? But I do want to show you guys this right here. Okay, look at this, y'all. Look at this. Next week data. Construction, spending. We got Tuesday, we don't have any real data. We got Wednesday, we don't have any real data. We got Thursday, all we got is initial jobless claims, no real data. Friday, we got consumer sentiment final. So all we got is consumer sentiment on Friday, okay? That's it. So next week, I'm telling y'all, it's going to be a smooth week. A lot of money is going to be made next week, all right? A lot of money is going to be made next week because we don't have all the craziness that has happened over the past couple weeks. And also, what's also happening is Mercury retrograde is over. So we're going to have, today and tomorrow, it's like the shadow period. It's like the shadow phase. Some stuff is going to, smooth out. And then by next week, we're going to be all good. And we're going to have some smoother moves that's coming. Okay? So 7 figures said yesterday afternoon was a movie. After SPY broke that 651, it was a moon mission. Yep. It dropped to 648. And then it popped back up. All right. So with that being said, y'all, let's get it, man. All right, let's get it. So we have, let's go to, so first off, options chain. All right. Options chain. Let's pull this up. All right. So when y'all are getting y'all contracts, right? All right. First things first, you need to know what your account size is. All right. A lot of y'all be trying to trade these expensive, contract prices just because somebody talks about a stock. All right. Just because somebody talks about a stock does not mean you go trade that stock. Okay. Does not mean you go trade that stock until you understand what it is you're actually doing and what you're buying. Right. Straight up. Does not mean you go trade the stock. Okay. Please hear what I'm saying. So we're going to break this stuff down. But before we break it down, we need to understand fundamentally some fundamental understanding so that when I'm talking, you know what I'm referring to. Right? So everything that I do, I'm going to do in steps. So that way you fully understand what I'm saying. All right? He said amazing heads up on IW and bouncing off that order block. I told y'all, right? I told y'all, right? So watch this, all right? All right, so this is your options chain, right? This is the options chain. So it does not matter the stock, okay? It does not matter the stock. So look at this. So we have on the left side, we got calls. On the right side, we got puts, all right? Now, the things you pay attention to when you're buying contracts is going to be obviously your bid and your ask. So this is going to be the difference between two things. This is the lowest price that somebody bought it for, and this is the highest price that somebody bought it for. Okay? So if you want to buy your contracts and you want to control your price, you're going to do a limit order, okay? You're going to do a limit order. So that way, and then on the mid, it shows you what the mid price point is, okay? So the lowest price is $1,480, $1,400.80, $1,480. The highest price is $1,515. The mid price is $1,498. All you do is multiply these numbers by 100 and you get the actual dollar amount. Okay? So 1480 is $1,480. 1498 is $1,498. So if you buy at market, which means that the contract is going to get filled immediately, the price may be closer to the ask. So what if the stock is going up and you're getting in the calls, right? Okay. And then you get in the calls and then you get in at market order just because you're anxious to get in the trade, and you get filled at $1,515, which means that you put $1,515 in this trade, right? But then it rejects fast. Now the stock is at, the contract price is now at $14.75, right? You're already down by $45, which is, what is it? It's like maybe 5%, something like that. But you're already going to be facing drawdown immediately because you got filled too high. So when you're getting into trades, you want to get in at the mid price or closer to the bid, especially when the spread is wider. This is your spread. Your spread is the difference between your bid price and your mid price. Okay? So in this case, the spread is $35. $14.80 to 15, that's 20. Another 10 is 30 plus 5 is 35. Right? And the average is $14.98. So if you can get filled at $14.90 and then the mid price is $14.98, you're going to be up $8 on this contract immediately and you're not going to have any drawdown. Okay? So that's how this goes. So that's the bid, that's the ask, and that's the mid price, and that's also the spread. All right? So let me know if that makes sense first off, y'all. Let me know if that makes sense. All right, we're going to take this step by step because this is a masterclass, right? And we're going to do this masterfully. So let me know if that makes sense. Okay? I was going to put, got out too early. Don't know why, because it didn't even break the trend. Okay, take your time. Now for sure, KDH. All right, let me know if that makes sense. The bid, the ask, right? April said, what if you trade stocks with tight spreads only? I'm going to get to that, right? I'm going to get to that. I got you. I just wanted to break down the spread first so people understood spreads, okay? So make sure you guys follow me, right? I always enter on market. I focus on being more precise with my entry. It has to be an A+ setup. I feel you. Okay, so now, right? If you guys are watching this and you haven't, be sure to like this video, okay? We gonna go deep. All right, we about to lock in. This ain't gonna be no 20-minute masterclass. We about to take some time with this and we about to cook. So y'all gotta let me cook. All right? I want y'all to, this is like a feast, a Thanksgiving meal we about to eat together. Okay? We about to eat this together. We about to eat together. So make sure you guys follow along and you guys understand what I'm saying. All right? So that's the first thing. So if you get in a trade and you're immediately down, it's probably because the spreads are too wide. And you didn't know that. And you got in that market order. So market order guarantees the entry, but you don't know what your price per contract is. Limit order guarantees the price, but you may take some time to get filled on that order. All right. I get in at mid. Because if I try to get in at bid price and the stock is going up, I'm not going to get filled because they're not going to fill me at the lowest price unless the stock pulls back crazy, right? I always get filled at the mid price, right? The ATR does not affect the spread. I hit IBIT puts, I played the order block. There we go. All right, some crazy spreads, especially, for example, MU. No, there are way crazier spreads than MU, okay? So let's keep cooking. All right, let's keep cooking. Let's go. And so also, now this goes back to, is this a day trade? Is this a scalp trade? Is this a swing trade? Okay. What size move am I expecting? Okay. Real talk. Okay. What type of move am I expecting? Because sometimes people be like, oh, I don't like the spreads on that stock. I get it. But if the spread is, let's say, $25 between the bid and the ask, but you're expecting a $7 move on that stock over the day, the spread don't really matter because you're going to make way more money. But if you're just trying to get in and out real quick, you don't need to trade wide spreads. So this is very critical and this is very key to understand when we're talking about what contracts to trade when. So if you're the shorter time frame that you plan on being in this trade, the tighter the spreads need to be. Now, if you're swing trading, then you can afford a little bit wider of a spread. I'm not saying go get crazy spreads, but what I'm saying is you need to understand how this goes and also volume. Okay? A lot of times, a stock that has a wider spread, that contract doesn't have a lot of volume in it yet. But the closer you get to the closer you get to the strike price, more volume is going to come into that contract, and then the spreads are going to tighten up. Right? So sometimes, if you get a contract that has a wider spread, but you are planning on holding it a little bit longer, you may be willing to get that contract because if you know where the stock is going, the closer we get to that strike price, the spreads are going to tighten up because more volume is going to come in that contract, then you're going to end up making more money. Right? You're going to make more money. So when I first started, I was getting in trades at market order. Right? I remember one time I got into a Lockheed Martin call, right? I got into a Lockheed Martin call. I was trading. This is when I started kind of trading by myself. I get in at market order. I'm like, yeah. Didn't really understand volume and stuff like that. And I'm like, why am I down $200? Right? Why am I down $200? Right? And then I realized, I'm like, oh, after I did research, I realized the spread. So I started looking at the bid and the ask. Right? So then I started only getting in at limit order and I started losing less money and I started becoming more accurate. Right? So my targets get hit, but it takes about 30 minutes before the stock market closes. Yes, because you're trading at the very end of the day. So I don't know what contracts you're choosing. Just trading to be like throughout the whole day, you have it. You know what I'm saying? Like, and if you're trading 0 days, it's like maybe just trade the next day's contract, right? If you're getting killed on that, then why keep doing something you're getting killed on, right? That don't make sense. So she said, right, meta spreads be large, but the move is 10, 20 points. Exactly, a day, so it's worth it. Exactly, right? So you need to know, right? Now this goes to, I've talked about this before. I made a whole video on it, right? This goes to average true range, which is your ATR. Now let me say this, y'all. People legit pay people $10,000 for what I'm telling you right now. I'm being so serious. I just got a generous heart and I operate out of abundance, right? But I need you to understand the stuff that I'm sharing with you right now is what people pay tens of thousands of dollars for, okay? So when we understand ATR and we understand choosing a contract, it could change your life, right? So watch this. So let's look at Dell. On average, Dell moves $6, right? $6. So let's look at the contracts for Dell. Okay. 375 to 415. Okay. So the spread there is $30, right? We got $30, $35, no, $30 spread. No. 25 plus 10, that's 35. We got a $40 spread, right? $40 spread. Okay, so with Dell. So if I want to get into Dell, let's say I see support and resistance. And let's say I see that they're at support right here. Okay, let's just say. let's just say that support is right here. Okay. All right. Let's say I see support is right here and I see a failed 2 down or a bullish 1 candle. Okay. All right. And let's say I take entry right here. Right. I take entry at support. Right. I take entry at support and I get a limit order. Right. I get a limit order. And let's say I get filled at the mid price. Let's say I get filled at $400, right? $400 per contract right here. All right. Now, those spreads they are a little tight. I mean, they are a little wide, but I know that they're going to move on average $6 a day. So if we're at support, there's a possibility that we could go from here, which is 158, to resistance at 166. And what is that? That's $8. So we would move, and look what they did on Friday. They moved $12, which was 175%, right? Boom. They went crazy, right? So that spread didn't matter because of the move that the stock made, because you know the average range that the stock is going to go every single day. All right. So let me know that makes sense. All right. Let me know that makes sense, y'all. Okay. So you need to know on average, what is the stock moving so that you know, can I afford these wider spreads? Okay. If you're going to trade a stock that has wider spreads. If you're expecting a big move, then a wider spread is okay because the stock is going to make that bigger move. Therefore, you don't need to be afraid of the wider spreads and you can still make that money, especially if you get in at limit order and not market order. Okay? So I just want to make sure I'm clear. Like I say, we cooking. We going step by step. All right? What up, Moni? Where you been at? I got an indicator. It's called SATY. SATY is inside the Discord. All right. So now, right? This is what I'm talking about the more you study, the less you worry. Because when you study this stuff, you don't really be worried. Right? You don't be worried. So that's a little bit wider spreads. Okay? Let me give you guys another example so we could, push this point home. A stock that has, ridiculous spreads a lot of times is this stock right here, Spotify. Okay? Look at the moves. Look at the spreads, 12.35 to 16, right? But if you're trading a little bit out of the money, you could get it for $500, $600, right? Now watch this. Let's go to the charts on Spotify. Let's look at their ATR. What's their ATR, y'all? Their ATR is $22. $22. On average, they move every day. So even though those spreads are wide, if you can catch this stock at the bottom or the beginning of the move that the stock makes will make up for the spreads, and you'll be able to make money. Okay? So the key is about understanding how to understand this stuff. Okay? So yeah, Carvana spreads. Yep. Does volume ATR determine as bid? So I just said that if the spreads are wider, there's a good chance if it's like out of the money that there's less volume in the contracts, right? This is what I mean when I say, let's make sure we paying attention, right? I just broke all of that down like 5 minutes ago. right? So how do you find the average so you know if the spread is right? So once again, right, we look at the options chain, right? You look at the options chain. You got the bid, you got the ask, and then you got the mid price, okay? That's how you, the difference between these two is a spread, right? So, next, right? What's up, money in hands? Does the move include pre-market? No, the move does not include pre-market. But if it does gap down and it gaps down into an order block, right? It gaps down into an order block, then it's a good chance that it's going to bounce and go higher. Y'all see what I'm saying? So yeah, if y'all, listen, every question that you have, if you come in a little later, you just got to go to rewind. Because I promise you, I probably answered that question. Because I'm being very thorough with this. All right, what's up, Chris Connor? It's all good, Terry, right? So with that being said, y'all, all right? So whether you're a beginner or you got some experience, this stuff is going to help you, all right? So now, right, wider spreads for slower moving stocks. If you can get the stock at support or resistance, you can catch a good move and cover the spread. Exactly, right? Exactly. So how are you calculating the ATR in real time throughout the day, including pre-market? The time frames show current ATR, but how are you seeing what potential is left? I mean, the indicator tells you, right? If you, listen, if you in a Discord, you should already know this stuff like this. We got lessons, like I got videos on this in the course, right? Like y'all should know this stuff, okay? You should, I tell you guys every indicator that I use, I don't leave nothing out. I don't adjust it, right? Because listen, you got to understand, what is an ATR, average true range? It tells you what is the average movement of the day every day, right? That's all it's doing. So you know, if the stock is only on average it moves, $5, but it's only at $1.50, there's a potential that it could go another $4, right? So, cause look at the indicator, y'all, right here. Day range, it moves $17, which is 74% of the ATR of 2289. It's that simple. While the market is going up and down, this number adjusts. This number adjusts, y'all. You don't have to do anything but pay attention to the indicator. That's all you got to do. All you got to do is have the indicator and pay attention to the indicator, y'all. That's all you got to do. Okay? Like really, really, really understand what I'm saying here. I'm putting this on a silver platter for y'all to understand. I did all the work. All you got to do is listen and execute and implement. That's all you got to do. Okay? This will help you become a better day trader. All right? So if you see a setup on a 2-hour or a 4-hour time frame and we only had 30% of a move, and you look at the ATR, you're like, oh, we got room. I'm going to stay in this joint. Right? So that's the options chain. If you guys are watching this, be sure to like this video and subscribe to the channel, y'all. Okay? I'm giving you guys literally tens of thousands of dollars worth of implementable, practical information that you'll be able to use this week and make money this week based on what we are talking about right here today. That does not happen, okay? So be sure to like this video and subscribe to the channel. And let me know where y'all tuning in from. All right? Let me know where y'all tuning in from if you have not already. All right? I told y'all, all I ask for you guys is to engage, right? Engage in what's being said. That's all I ask for y'all. All right? Hit the like button. Share this with somebody that you know is in the market if you know. That's all I'm asking. Okay? So what's up, Liz? So I'm telling you guys, this stuff right here, we can stop the live right here. We can stop the live with what I just gave y'all right there, and you could go run up an extra, an extra 20% on your account this week. But we just season the food up. We ain't even put the food on the stove. We ain't even put the food in the oven. Right? Like, real talk. We just getting started. But we can stop right now. You know what I'm saying? So make sure y'all following along with what I'm saying. All right? Shout out to New York, Connecticut. Right? Market entry, so now I can get more profit. Exactly. Shout out to DMV, South Georgia, one of the countryest places. She said, what seasoning did you use? All right, listen. We got a little bit of Cajun. We just put some Cajun on the food. You know what I'm saying? Some Cajun seasoning, a little bit of onion powder, and a couple little dabs of Old Bay. You know what I'm saying? Couple little dabs of Old Bay. You know we all like that Old Bay. You know what I mean? So, IV, I got you. I got you, Tim. Right? I said we was gonna go over the options chain. We just getting started. All right. Exactly. We ain't even turning. The oven's still preheating right now. All right. The oven's still preheating. All right. Exactly. Hey, listen, that Old Bay is kind of like a mandatory thing. You know what I'm saying? Yeah, you got to have the fresh minced garlic too. Exactly. See, exactly, Nard. More volume equals tighter spreads. Right? Shout out to Tampa Bay. It ain't too spicy, Angela. Right? Shout out to Orlando. So let's keep going. All right? So let's keep going. All right. Double R said, what you know about Old Bay? Come on now. Come on now. Real talk. I'm also like a little chef too. You know what I'm saying? I know how to make a lot of things from scratch. So, you know what I mean? I got a lot of different little, you know what I'm saying, talents. Are the ATR levels, call and put levels reliable? Yeah, they're pretty reliable. But you just match them up with your levels that you have, and you know what I'm saying, you just back test it. So, all right, so now, right? So, what else we got on the options chain? Right? So let me give you guys, okay, so let's go to IWM real quick. So you got to understand that stocks that have a lot of volume, they're always going to have tighter spreads, right? So for example, IWM, we got 225 and 230. That's only $5, right? So if you only getting one contract, you could get in that market because it's only $5. It's only $5, right? And look at the mid, it's 228, right? Now, here's the thing. Implied volatility. Basically, this is what makes your contracts become more expensive, right? This is what makes contracts become more expensive. Because when you have increased implied volatility, the price of the contracts go up. They get inflated. Why? Because implied volatility means that if the implied volatility goes up, there's an implication that volatility is going to go higher, which means that institutional buyers are going to put more money into these contracts and inflate the price. So sometimes when you wake up and you see contracts are super expensive, look at the implied volatility and you can be like, damn, I may not trade today because I'm going to be over trading for these contracts because they're telling me that there's something about to happen. Okay? So that's implied volatility. That's why when a stock has earnings, the contracts that week always go up because implied volatility goes up. So instead of trading a stock for earnings, wait until the stock has earnings and then you'll see that the contracts drop and then you'll be able to enter into trades. All right? Let me know if that makes sense. Hey, KP said Old Bay is not seasoning. Hey, it's always a hater. It's always a hater somewhere. You know what I'm saying? But no, hey, I feel what you're saying though, KP. Hey, what seasonings do we need to use then? You from New Orleans, so y'all got all the seasonings. What we need to use? Yeah, I did a whole video about that, Money in Hands. What's up, JK? Westchester, New York. All right. So that's the options chain. IV, right? Let me see if I got this tool real quick. Hold on. Let me see if I got Freeform on my laptop. Here we go. All right. So watch this. Okay. Watch this, y'all. Let me... All right. Increased. Okay, so implied volatility, right? Equals increased premiums. Okay, increased and overpriced. Okay, right here. So I'm gonna show this to you guys. This is, you want it to be simplified, KP? This is the simplest way, right? Hey, she said, I know some dummies that traded MU that they're earning bozos. Nah, for real. You can also get in the profit without a move. Exactly, right? Uncle Tony's barbecue sauce on Amazon, world champion. Okay, might have to check that out. I be liking the Kinder's barbecue, and then Stubbs barbecue sauce be good too. I ain't even gonna lie to y'all. All right, so look, implied volatility, right? Increased implied volatility means increased and overpriced premiums. Okay, that's what it means. So I would stay away. I stay away when the premiums are overpriced. Because if the premiums pump up in price, it's not value, it's just hype. So those contracts can lose value very fast and a lot faster because the only reason why the price of those contracts went up is because the implied volatility increased. So once the implied volatility drops, the price and the value of those contracts are gonna drop as well. Okay? That is the simplest way that I could break that down. Okay? So that is what we mean when we're talking about implied volatility, okay? And we're looking at that options chain. All right? So now some of y'all are gonna say Greeks, okay? Now, in my opinion, yeah, hey, Stubbs be slapping. Stubbs be slapping. Now, in my opinion, okay, I only pay attention to two Greeks, but not like not all the time. Okay. When I'm scalp trading, right? When I'm scalp trading, I'm not really looking at the Greeks like that because I know what contracts I'm choosing, right? So is that move only applicable to live trading and not pre-market? What are you talking about, Liz? Is what move? So I'll answer that when you answer that question. I got you. So let's go back to the options chain, right? So now, Greeks. Delta is basically how much is the contract going to increase in price for every dollar that it goes up. Okay. So if I got a deep in the money contract, right? All right. Yes, it's going to be more expensive, but for every dollar that this stock goes up, I'm going to make, $83 per contract. Right? So if I get this contract right here, for every dollar that it goes up, I'm going to make $25 a contract compared to in the money, which is going to be higher, right? Now your theta is basically the opposite. How much am I going to lose, right? So when you're trading contracts, especially 0 days, every minute is going to be money, right? So basically, some people say never get into a contract with a delta lower than 30. I mean, to each his own, right? Everybody has different ways. You kind of got to just like test it and see what you like doing. I've taken trades with a delta of 25, right? And made, 100%. So it really does depend. But do I pay attention to the theta? No, because I usually get like 1 or 2 levels out of the money, like at the money or 1 or 2 levels out of the money. And that's it. I don't always be going like super deep out the money because I know my IWM levels, right? Now, if you're trading a different stock, then it's like, okay, I can know what the ATR is, and then I can choose my contract based on that, right? Because think about it. If you want to trade, let's just say you want to trade Spotify, right? And you see a good setup, like right here is support, right? If they move $22 a day, and right now they're at $44.75, let's go to Spotify real quick. Spotify, and they're at $4.75, and they move $22 a day, and they're at support, then you could go down to the $4.95s, right? Because that's $20. And now you could trade Spotify for about $500 instead of getting at the money at $16.25. Y'all see what I'm saying? Or you could get it at like, $4.85. And that way, if they make that move on the day and they get in the money, these contracts will be going crazy because it went from being out of the money to being in the money. So that's why you want to know what is the average that this stock moves. So if I know that IWM moves, $5 a day and it's an ETF and it's 0 day to expirations, and if I see us catch, if we come down here, this was after hours, but let's say I know that they're at resistance, okay? And they're at 247, and I know that we're gonna come down to at least 244, then I know that, okay, I can get a out of the money put because I know that they're gonna go at least, $3 to $4. So I can get it out of the money contract because I know that we're at the top of the high of the day, and if we're only gonna go down because we're at an order block or a fair value gap, then I could get $2 to $3 out of the money because I know that that's where we're gonna go to, right? Because I know the ATR and I know, IWM's potential on a daily basis. Okay, so let me know that makes sense, y'all. Let me know that makes sense. Right? And that's why you don't trade earning days, because contracts are going to have high. Yeah. Well, I don't trade earning days before the earning report, right? After earnings, I will, because the IV has already been crushed, right? Because it's about what's the expected move on earnings, right? If they expect NVIDIA to go up by 5% and NVIDIA only goes up by 3%, it did not hit its expected move, and the IV from all the contracts that were purchased are going to drop in value, and then you can trade once the IV has dropped, right? So that's what I say to that. All right, she said, I'm green, I don't be, this is why we show up. All right, what up, Stoic Trader? It's all good. We all got lives, right? Hey, appreciate that, Newmar. Right? What about when it gaps the whole range in the morning? I mean, you just got to know your levels, right? But if it gaps the whole range, it doesn't matter. It still can move $5 a day, right? That's the thing. It don't matter. It can still move $5 after it opens. So if it gaps down $5, then shit, it could go up $5 and fill that gap. You get what I'm saying? So you just got to know how to pay attention to these things. Right? You just got to know how to pay attention to these things. And this is why I always repeat myself. What do I say, y'all? The more you study, the less you worry. This is why I put out so much content, because I know that a lot of people don't study. A lot of people think that they're going to wake up and go make millions of dollars in the market. Right? A lot of people think they're going to wake up, go on the market, and make thousands of dollars every day easily, because somebody else told them that this was that easy. But what they didn't tell them is it's only easy because they've been studying this stuff for 3 to 4 years and taking L's. Right? So it's only easy because it became easy because of all the years of work that they put in. What's a good IV? I mean, shoot, if the IV is below like 50%, that's smooth. Some people say anything at 100% or higher, don't mess with it. The lower the better for me. But like, 50%, 30% is cool. Right? Will this be recorded? It's being recorded right now. So say the ATR is $7 at the open, it gaps that whole range. I just told you, right? If it gaps up the range, then it could come down and fill that gap. It could still make that move. It's the up and down movement factored in. Expected move $5. Expected move $3. Downside, then reverse. Nah, it only happens at open. So if earning is at Wednesday after hours, because NVIDIA, always notice the biggest companies only report after hours. You never see a Google, you never see an NVIDIA report before market open. Never. It never happens like that. There's a reason why. So what happens is, if they have an expected move of 5%, not $5, 5%, because percents matter more than dollar amounts in the stock market. 5%, because that's why they always talk about percentages. And then overnight, whatever they open up, only up 2% or down 3%. It goes in both ways. It's just an expected move. This stock's earning is expected to move the stock price up 5% or down percent. If it does not make a bigger move than the expected amount, you're cooked. Those contracts will drop in value, and then you can take an entry once the IV has gotten crushed. Okay? Back in the day before Amazon split, out of the money's kind would move all and be so expensive. High IV, you could catch me. Yep. As a beginner, and I'm still green, I didn't know what to study or how to study. Hey, I get it. Right? 0.3 is good. That's cool. A 0.3 is okay. That's kind of like, that's like a baseline. You know what I'm saying? You could trade. If you want to scalp trade 0.3, then that's cool. You know what I'm saying? But if you want to swing trade, maybe a little bit higher. But once again, some people only trade deep in the money contracts when they swing trade. Right? When I first got into the game, I used to only swing trade, deep in the money contracts. My deltas would be like 0.60. Right? But you got to understand that the deeper in the money, the more expensive. So I'm exposing myself to greater risk. So you got to find a balance between the two. Right? Study daily, operation, collect data, analyze, adjust, always. Exactly. But now, because of TPC, I'm getting, hey, Lace from A to Z, Stoic Trader. Right? Sorry. All right. So with that being said, for all of you guys, if you are watching, be sure to like this video, subscribe to this channel. Let's get this video to 500 likes, y'all. All right? 500 likes. So now, right, we just went over the options chain. Okay? We just went over the options chain. Okay? That's how I learned deep in the money swings. Yep. I kind of stopped doing that because I started to understand more. Because you could get, if you get, let's say you want to swing, Google. A deep in the money swing might be $1,500. But I could get at the money at, $500. So I could get two contracts for $1,000 instead of getting one for $1,500. You know what I'm saying? And so we may be able to make a little bit of money faster depending on how fast the stock makes that move. Okay? So yeah. Now another thing is, a lot of times they try to make it seem like being a day trader is like stupid because it's short term, right? But a mindset that I learned is there's nothing wrong with having a short term mindset when you're day trading. That's the whole point of day trading, is to be in and be out in an hour, 30 minutes, whatever the case is, right? Because you can make a lot of money in the short term and then go put that in your long-term investments. And that's the whole point of day trading, right? The point of day trading is not to, put all of your life savings in it. No, you put money in, you get money out, you stack it up, and then you go buy more shares. You go put it in your long-term investments. You go put it in long-term swings. You go put it in leaps. You stack the money up. That's the whole point of the day trading. That's the whole point, right? So it's not about, don't only be long-term minded. I don't believe that. Because if you're only long-term minded, you're going to miss out on all these shorter-term moves that you can make in day trading, and then you can flip that money, and then you can put it in your long-term moves, right? Because we could be in a major uptrend, but a short-term downtrend. We can make a whole bunch of money to the downside. Let's say you go make $25,000 on some puts over a month period of time, right? Okay. Now we at the bottom of our pullback. Now you got an extra 25 racks. Now you go put 15,000 into some swings because we about to go right back up. You get them 3 months out. Now you just turned that 15,000 out of the 25,000 You turned that 15,000 into 40K because you got 300% on that. Like, this is how we really get to the money, right? This is how we really get to the money. This is how we really trade. This is how we change our life. But you got to be savvy enough to know the game. All right? Yeah, if you get deep in the money, then that's more, for me, that's more like longer term, right? I'm not going to get deep in the money short term. I'm just not going to do it, right? Because in the stock market, you don't get paid for how long you're in a trade. Actually, the longer you're in a trade, the less it's going to make you depending on your strike price, right? My goal is to get a solid move in a shorter period of time and cash out. That's me. Everybody got their own trading style, right? But me personally, you can start holding, trades way longer and being greedy when you up $250,000. You know what I'm saying? Or you just got money to blow. But when you got money to blow and you got money, you're not going to be greedy. You know why? Because you're going to get what you can get and you're going to get up out of there. And you're going to keep growing your account because that's what it's about. The name of the game is just keep stay in the green. Right? I did that before and watched the stock move $1 and I didn't make $1. It was painful. Exactly. Because you got to understand, the more time you put on your contracts and the deeper you go in the money, the less it's going to move. So the deeper you go in the money, the bigger of a move that you need, right? The further expiration out you go, the bigger of a move the stock needs to make money. So when you can learn how to trade weekly contracts and 0-day expiration contracts, this is how you make a lot more money, right? This is how you make a lot more money, right? I need to do that often, stop holding. Yes, no extendo. I always say, everybody wants 500%. 10 trades at 50% is still 500%, y'all. I say this every day almost now, right? And what do I also say? You don't get rich overnight. You get rich over time, right? That's why it's so important to use several time frames. Yep, exactly. I like trading investment. Exactly. It's important. How you deal with missing big moves like yesterday as a beginner, that gets to me. You just stop caring, right? Okay. You have to stop making trading your life, right? Trading is not my life. I promise you guys. I got way too many other things going on, right? I'm not trying to be, the best trader on the planet that everybody knew about. I don't care about that. You know what I care about? Being consistent, compounding my money, compounding my account, right? That's what I care about, right? I come from single parenthood, right? Lower middle class, right? I'm not supposed to be here. I'm not supposed to be in the stock market. And I understand that the more money I make, the more money I'm going to make. The more money I get, the more money I'm going to get. This is how the rich get richer and the poor get poorer. So all I need to focus on is keep getting more money so that I can keep putting it into longer term swings when we have a pullback. Right? That's it. So I don't care. I did not trade yesterday. Right? This whole stock market dropped. I wasn't phased not one bit. You know why? Because I'm not chasing the stock market every day like a dog chasing his tail. I told myself I wasn't trading. I didn't trade. I'm not just saying that to sound like I'm doing the opposite of what everybody is on YouTube. No, I'm saying that because I really understand what's going on in the stars and the cosmos. So I'm just not going to trade. I'm going to wait till next week because trading is not my life. You have to stop making trading your life. If you could go make an extra $150,000 a year in trading, and then you know what to do with that, you could go buy some shares, go get you some Bitcoin, right? And let time do what it does. You're going to get richer over time without doing anything. So you have to stop making trading your life. Stop being so attached to it. The more you're attached to something, the more it controls you. And I say this all the time. There's more than 6,000 stocks in the stock market. You're going to miss setups every day. That's why when people say, oh, did you see this stock do this? Did you see this stock? I don't care. You know why? I'm not saying because I'm being rude, I'm being an asshole. No, it's because I am making sure that I'm grounded in myself because I got what I got. This is why y'all be like, oh, I missed this, I missed this, I missed this. You're so focused on what you miss, you keep missing things because you're not learning how to focus on finding your setups. You're not focused on finding your setups. You're so focused on what everybody else is saying on Instagram, what they're doing in this group, what they're doing in that group, right? What they're saying on Twitter, what they're saying on Threads. Should I trade futures? Should I trade stock options? I'm going to go do this. I'm going to go do that. And doing all of that, you never focus on what you need to focus on. I'm telling y'all. So that's how I deal with missing out on trades. I don't care. I have built my life up to the point where I got multiple things happening, right? See, this is when the stuff gets deep because you got to understand, right? Let me follow what I'm saying right here, y'all. We have all been lied to, okay? And a lot of people, a lot of you guys have bought into the idea of what they've been lying to us about. This is what we've been lied to about. We have been lied to think that we all need to be doing just one thing. And that's it. The reason why they tell us we need to be doing one thing is because they want us to get in one career and work for these major corporations forever. But deep down, we are pluralist. Deep down, we should be doing multiple things with our life because we all have so many talents. We all have so many interests. So what you do is you do one thing, you streamline it, and then you could go do the other thing and manage what you just did. And then you continue that on, and then you look up, you're 35, 40 years old, and you got 3, 4, 5 things that are being managed, and each one is bringing you 60, 70K a year. If you got 3 things bringing you in 70K a year, what's 7 times 3? That's $210,000 a year. But see, what you are doing is you're buying into the thought that you can only do one thing in your life. And because you think that, you're like, oh, stock options trading, that's my one thing. No, that's not how this works. It is a thing, but it's not the only thing. So I don't allow myself to be tethered to the stock market. I get my money and I get out, and I allow time to do what it does because I have other things going on because I am a pluralist. I am not a soloist. I don't allow myself to only do one thing and be tethered to that one thing, and now my whole eggs are in that one basket. No, that's not what I do. And that's not what you should do. You should use the stock market for what it is, because the only reason it exists, trading exists, is to literally make money. My life is not only about money, but I understand that in this society, we're in a capitalistic society, so you need money so that you're not a slave. So you need money so that you could be in a position to be able to know that it's not about the money. It's a mind fuck. But the only way you can do that is learn how to get multiple, avenues bringing you in $3, $4, $5, $10,000 a month. This is how you play the game. So go be a pluralist. Don't be a soloist thinking that the stock market is the only thing that's going to change your life, because it's not. Because my life changed before I got into the stock market, if I'm being honest, because I've been this person. I've been doing stuff. I've been talented, right? The stock market is just another avenue to run up another bag because it is a zero-sum game. When you win, somebody else loses. It is what it is, right? This is real life. This is real life. Okay? I'm telling y'all, so many of us have been fed a lie. Right? Then it said jack of all trades, master of none. Yeah, we've been fed that. Don't be a jack of all trades and a master of none. Okay, but watch this. What about the CEO of the company you work for? How Elon Musk had PayPal, SpaceX, Tesla, right? Robots, Robotaxi, Jeff Bezos, Amazon. He's trying to control the world. So they can go do multiple things, but we can't, right? They can go do multiple things, which is why they're billionaires, but we got to do the one thing to just work for their entity. Really think about this stuff. You got to deprogram your mind. You got to deprogram your mind. If you can go make $1,000 in the stock market in the first 45 minutes of the day and then go on about your day, why wouldn't you do that? Why wouldn't you do that? Never limit the credit. Exactly. We all have God energy inside of us. So why would I sit here and limit myself to only doing one thing for my life? That's why so many people are so empty inside, because they're only doing one thing, and it's usually just a job. There's nothing wrong with having a job if it's bringing in a bag and you know how to flip the money, right? So it's nothing wrong with a job, but there is something wrong with only having a job. That's where we get it twisted. If you making 70, 80, 90K a year and you know how to put that money in the market and flip it, that's more valuable than being an entrepreneur only making $2,000 a month. You ain't got no insurance. You ain't got your teeth cleaned in forever, right? You struggling. You can't do nothing. You ain't been on a vacation in 7 years because you're only making $40,000 a year, but you're an entrepreneur, right? But you don't want to go get a job. But if you got a skill set and a job that was paying you $90K a year, and then you learn how to trade and put money in the market, now you could go make $150K, and then you could go turn up your life. Come on, y'all. That's what I'm saying. I'm not picking up what they putting down. I'm not buying what they selling because it's all some bullshit. You want me to do this one thing so I can slave for you. Meanwhile, you in Barbados, you in Italy, you in Africa, you in the Philippines, building another business, doing something else. Meanwhile, I'm over here doing this one thing to build your company up. Come on now. None of these people are that smart. That's the kicker. None of these people in these high places, they're not smart, they're manipulative. They know how to hide the truth from you and give you what they think that you need to hear to make them richer. That's what's really happening in the game right now. So I really want you guys to embrace this whole thing of being a pluralist. Listen to me, don't listen to me. I don't care. I'm going to do what I do regardless. Right? I'm going to do what I do regardless. I'm just trying to share this with y'all. You know what I mean? So I see how people act when I tell them I trade now. They think I'm wasting my time. Hey, Hey, Nar, and watch. All you gonna do, you gonna keep doing your thing. You gonna be up like a half a ticket in the market. You gonna be just chilling, and they gonna be like, man, they just gonna be looking up to you. They're gonna envy you, but their ego is not gonna allow them to be like, hey, bro, really put me on. That's just how it be. You know what I'm saying? That's just how it be. It is what it is. But shout out to you, bro. Real talk. Real talk. Exactly, Mark Quinn. Exactly. Right? This stuff goes deep, yo. This stuff goes deep. And all that stemmed from one question of how do I deal with missing out on trades? You know what I'm saying? So this is, when I get one question, I could go on all these different, like, these different places, but I really hope that you guys be understanding what I be saying, because this stuff is real. You know what I'm saying? You think the man who owns the hospital knows how to do surgery? Exactly. Exactly. The person who owns it, exactly. The hospital, he just know how to buy a building. You know what I'm saying? Like, man. People start making fun of you or making jokes until they see you actually. Exactly. Exactly. And it's just like, look, let them talk, yo. Let people talk. That's all you got to do. Let them talk. Because watch this. What's real can never be threatened, and what can be threatened is not real. One thing I learned in life is all you got to do is give things time. So if they want to talk their shit and they want to laugh and joke, let them. Because it's all fun and games, it's all jokes. Until you could walk away from a job that y'all was working at, or you could go on this vacation for 3 weeks and they can't even take off for a day because they don't even have a job good enough that's going to pay them when they're not there. So their life is tied to being somewhere to make money. So it's all fun and games until we see the separation of life in a couple years down the road. You know what I'm saying? That's how this game goes. So let people talk. But this is also why you don't talk. Don't tell people what you do. Don't tell people you trade. Right? Don't tell people you trade. When people ask what you do, just say I work at Walmart. You know what I'm saying? Just say I work at Walmart, or whatever your real job is, just say that. Don't tell nobody that you trade. Don't tell them nothing, because why do it matter? This is what I learned. Never tell people what you're doing. Just let them see the results of what you're doing. Never tell people what you're doing. Just let them see the results of what you're doing. Because the biggest thing that speaks is results. The biggest thing that speaks is results. You know what I'm saying? Exactly. They might give you some money. Feel me? Real talk. So listen. Listen. So now, I don't want to say we got off topic, because we still on topic, but I feel like that was needed to be said, right? Because one thing I'm going to do is I'm going to always give you guys the messages that come to me, right? I'm going to always give y'all the messages that come to me. So when I get these messages, I just got to deliver them. You know what I'm saying? So I've been some trouble with getting a connection to Discord. So Wayne, so when you guys come in the comments, you guys got to stop doing that stuff. I told you to email me and you have not emailed me. Right? I told you to email me. You have not emailed me because I would have emailed you back. Email me. My email is on the YouTube. Right? It's on the YouTube. It's on every video. It's in the bio of my YouTube channel. Email me. That's all you got to do. Right? Exactly. Don't nobody care that you a trader for real. Just go get your money, shut up, and go change your life. You know what I'm saying? I don't tell nobody that I meet in the world I got a YouTube channel. I don't tell nobody that I trade. I don't tell them. If they say, what do you do for it? I'll be like, I'm in finance. That's it. Because my ego it's not about my ego. Right? I'm not walking out in the world trying to tell everybody what I do. I don't want nobody to know what I do for real. Y'all ever read the book, The Millionaire Next Door? The Millionaire Next Door? Go be the millionaire next door. Because watch this. As long as your life is lit, that's all that matters. All that matters is your life being lit. Nothing else really matters. It don't matter what somebody else think. It don't matter what they say. All that matters is how is your life for you. So if your life is messed up, then you need to fix it. If your life is lit, then keep going. But live for you. Don't live for anybody else. Don't live for the aesthetic of what you think somebody else is going to be impressed by. Right? Seriously. Live for you. Right? Exactly, double R. People start seeing you as an opportunity. They start seeing you as an opportunity. Right? They start overcharging you, right? They know, oh, YouTube, right? YouTube or they see, they go to YouTube and they see, the subscribers. Or they hear you in day trading. And then what? Now, a freaking, a $40 service is now $60 because now they just know you got it. I don't want people to think that I got it. I literally don't want people to think that I got it. You know what I'm saying? Silence is golden, y'all. Silence is golden. It don't matter. It don't matter. Right? I want the quiet money. You ain't never gonna hear me come on YouTube and be like, hey y'all, I'm doing this. Oh yeah, I got this much money. Yeah, I'm doing it big like this. That's a child, right? I have nothing to prove to any of you. I have nothing to prove to the world. Because the things that I've been through in my life, I already proved it to myself who I was. Therefore, I know who I am. I don't need to prove anything to anybody outside of myself. So if I go buy something If I go buy an Aston Martin one day, I'ma just cop the whip. I'ma pull up to the house, right? And we gonna celebrate as a family. That's just what's gonna happen. I'm gonna call my bro and be like, hey, dog, hey, I did that shit. You remember I've been talking about that Aston Martin for the last 6 years? Bro, I really did it. Just gonna call. I'm gonna be like, hey, pull up, man. Let's go on a ride. Come ride in an Aston Martin with me. I'm not gonna go post it on social media and be like, oh yeah, hey, look at me, guys. I'm buying my dream car. What? Oh yeah, I bought it cash, pink slip. Here go the pink slip. Why? Why? Did I do it for me? Or did I do it to prove a point to the world because I didn't know who I really was? Because I felt inferior because everybody's always talking about how much money they got and I felt like I had to keep up. No, I'm gonna do it for me. And when you do things for you, you don't care about what anybody else thinks of the decision that you made. You know what I'm saying? Real talk. Real talk. Right? Word, get low. Exactly. My life lit. And don't anybody know it for real. Exactly, Ash. Hey, I know your life lit. I know your life lit. Yeah, nobody ever knew what I had going on. They just, exactly. Curate your circle. Include only those who celebrate your wins as their own. Not everyone invested. Exactly. Don't nobody care about your, not a lot of people care about you winning for real. They're going to try to, sabotage it. Or they're going to throw negative energy your way. You know what I'm saying? Exactly, because you like it. Not one post on social media needed. Exactly. Exactly, KP. Y'all, some of y'all be following me on IG. I don't be posting no more. I don't care. You know why? Here's why I don't really care about Instagram. Now watch this. Watch this. The reason why I don't care about Instagram too much is because Instagram is a platform for the flexers, right? Everybody is on there putting their best on and they're saying, look at me, 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 look at me. I got this, I got this, I got this, right? I got this car, I got this money, I made this money, right? I got this BBL, I got this, I got that, right? That's not my personality. So I spend my time on YouTube because I get to really do this, right? Make videos like this. Because YouTube is a platform where you get a chance to go deep. You can't go deep on Instagram. I'm not a shallow person. I'm not a superficial person. I don't work well on Instagram. I am not received the best on Instagram because everybody is superficial on Instagram. But people fuck with me on YouTube. Why? Because we get to go deep. That's why I don't be on Instagram like that. That's why. I am not a flexer. I have nothing to show the world. For real. I don't care. I don't care. Right? I care to really share my real thoughts and really educate. I don't want to just flex a screenshot. I just want to be able to really pour into people in a real authentic way on YouTube. That's just why I don't really be on Instagram like that. You know what I'm saying? So, straight up. You know what I'm saying? Real talk. So, I'm enjoying Twitter back in the day. Man, Threads is a new Twitter, and it's horrible. Never even had an IG. I'm good. Yeah, for real. Good mindset. Yeah. Sage said that's what a broke person would say. Yeah, I feel you, Sage. I feel you. Um, so, we already know George. We know. Hey, but what Drake say? Imitation is a form of flattery, but it's really annoying me. You know what I'm saying? So look. So look, y'all. So now, so we went over, contracts and all of that stuff. And by the way, this is still a masterclass, because listen, this is still a masterclass. Exactly, George. Ed. Hey, somebody told me when I was younger, he said, you make a living by what you get, but you make a life by what you give. Right? And so I base my success off of what I give. Because if I could give, I could make a life. I could help somebody change their life. I don't want to make a living by just getting something. I want to make a life by giving things. You know what I'm saying? Real talk. Real talk. So yeah, y'all. All right. So listen, exactly. I just get to channel the truth, right? Straight up. I just get to be me, right? At this point in life, I'm just getting paid to be me, right? It's always going to be, and also, what did J. Cole say? What did J. Cole say, y'all? What did J. Cole say? Hold on. Because we gotta go there. What did he say? Exactly. Everyone else is taking real talk, KP. Right? What did J. Cole say? He said, it's always gonna be a bigger house somewhere, but ninja, feel me. Long as them people in that house love you dearly, right? Always gonna be a whip that's better than the one you got. Always gonna be some clothes that's fresher than the ones you rock. Always gonna be a chick that's better out there on the tours, but you ain't never gonna be happy till you love yours. Come on, y'all. Come on. Cole gave us the blueprint. See, a lot of people don't love themselves. They don't love their life. They don't love theirs. That's why they're so busy trying to keep up with everything. That's why they're trying to show off everything. Because social media got people really believing that they have to share every part of their life to get people to believe them. You know what I'm saying? I'm telling y'all. So listen. You ain't never gonna be happy till you love yours. Right? You ain't never gonna be happy. Period. I don't care how old you are, what you're going through, woo, it don't matter. Right? So always remember, right? I drive a Honda. I love my Honda. I love it. You know what I'm saying? I love the oil changes is $80, right? I'm gonna ride that Honda until it conks out. I'm gonna be up silly, still driving a Honda, right? I'm telling you, I don't care, right? I don't care. So, it is what it is. Everybody different, right? Everybody got different motivators. Materialism is not my motivator. That's just being honest. All right. Ed said, I disagree. You giving a blueprint. Hey, I appreciate it, Ed. Real talk. All right, so listen, y'all. Let's talk about scaling in and out of trades, okay? I really want to talk about scaling into trades a little bit more than scaling out of trades. Because what I've noticed is a lot of people, they over leverage, okay? They over leverage. So when you look at, getting in a trade, hey, Chris said I'm a car guy. Hey, I ain't gonna lie though, but look, watch this. Let me say this real quick. What I am about to buy is I'm gonna buy a 92 Cadillac DeVille sedan, and I'm gonna fix it up, right? Like, that's what I'm about to buy. I'm about to fix up an old school Caddy, a sedan. That's what I am gonna do, right? I like cars, but while everybody wants to go and buy the Benz and this and that, I'm about to get me an old school Caddy, and I'm gonna fix it up, and I'm gonna make it like crazy. So that's what I am gonna do. An old school Caddy, man. I already know what kind of like the car, everything. I'm gonna do that, right? So that's just something that I'm gonna do because, man, when I was younger, I wanted it. I ended up getting an Oldsmobile, but I got an Oldsmobile Broham. I put some 12s in the trunk, right? I was a YN for real. Trunk was vibrating. I couldn't even hear nothing, right? That was back in the day where everybody had the dash, right? And you put CDs up in that joint, and then like MP3s was coming out, so you would connect the MP3 player to the joint, right? So that's back then, right? But I had an old school Oldsmobile. That was my first car, but I'm gonna get me an old school Caddy, a sedan, and I'm gonna paint that joint. It's gonna be silly. I'm gonna make it brand everything. So that's what I'm gonna do. That's gonna be my Lambo, right? That's gonna be my Lambo, if I'm being honest. You know what I'm saying? I ain't gonna do no white walls. No. See, look, I'm a Cali dude, right? In the South, and I am in Houston, so I know I'm gonna join like a car club, cause they cars be looking crazy out here. They be having the little joints that be sticking out on the side, right? The rims that be on the side. But I'm a classic dude, so I'm not gonna have no white walls. But I'm gonna get some chrome joints. You know what I'm saying? Not chrome. I'm gonna get some alloy rims, but I'm gonna paint it. I'm gonna try to get as original everything as possible. And I'm gonna really, really, really make that joint that's gonna be my weekend car. I'm gonna be a young OG, right? With a fresh old school Caddy. So I'm gonna have my Honda. My Honda gonna be my day-to-day car, right? My Honda gonna be my day-to-day car. And then I'm gonna have my old school Caddy. You know what I'm saying? I'm gonna have my old school Caddy. And then if I wanna go further, after that, I might get like an Impala, or I'm gonna get a Buick Park Ave. Cause I used to love them Buick Park Avs too. That was when we used to be, you know what I'm saying? My homeboy, he had a Buick Park Ave on 20s, on chrome rims, had two 12s in the trunk, you know what I'm saying? We would go to our house parties and stuff. So, yeah, that's what I'm gonna get. Hey, now, real talk. You know what I'm saying? Real talk. So, that's definitely what I'm gonna do. Oh, you got a 72 Chevelle? That's lit. That's lit. Yeah. Nah, DeVille for sure. So, I mean, yeah, for sure. Hey, I'm Cali to the bone. Yeah, them scrapers. Yep, them scrapers. Yep. Them scrapers. I do, listen, I like cars. I just don't care about the new cars, right? Like, if I was to get a brand new car, a Benz, it would be a Benz GLE coupe. I like the GLE coupes, but outside of that, like, cause the way I think it's like in instead of me going to drop 120,000 on a car, a brand new car, let me go buy an old car for 10,000 and let me go put 20,000 into it and let me go get something that I wanted as a kid the whole time. You know what I'm saying? So it's like, and older cars, they hold up better anyway. So that's what I want to do, and that's what I'm gonna do. So I'm gonna have a fleet of old school cars, and then I'm gonna have my day-to-day car, but that's it. You know what I'm saying? So, but yeah, I grew up on scrapers. You know what I mean? Everybody back in the day, Oldsmobiles, Buick LeSabres, Buick Park Aves, Caddies, right? Chevelles, all of that. That's what I grew up on. So yeah, Cutlasses, yep, all of that. So yeah, I don't like the white walls though. You know what I'm saying? I don't like the white walls. All right, that's funny. That's funny seeing Ash in a Park Ave back in the day. That would've been funny. For real. Right? Oh yeah, I'm from Sacramento. I'm from Sacramento, California. You know what I'm saying? Yeah, box Chevys, yeah. No, I don't have a referral code. But yeah, y'all. So look, scaling in and out of trades, right? Scaling in and out of trades. All right. So look. So let's say you want to enter into a trade, right? Now that's facts, Cali Nola. Two different worlds. So let's say that you want to enter into a trade, right? You want to enter into a trade. And it's a lot of y'all in SAC. Hey man, if we start getting enough people from SAC, I'll do a meetup, man, and we'll, you know what I'm saying, like a trading meetup, and we talk, you know what I'm saying, like a little small event. So yeah, I'm from SAC, man. I went to Natomas High School. I grew up in Natomas. So I don't like the gangster white walls. All right, so let's say you want to enter into a trade. All right, so let's say, let me give you guys a good example. So let's say you're like, all right, I want to trade this day right here, right? Okay. So first things first, we're on a 30-minute time frame right here, right, y'all? We're on a 30-minute time frame right here. So sometimes, depending on the market, the stock market is gonna it's gonna go up and it's gonna go down, right? Now, what do I always say stocks are gonna do? What do I always tell y'all to wait for? Put it in the comments. What do I always tell y'all to wait for when we talking about entries? Let me know. What do I always tell y'all to wait for? The retest, right? The retest. Exactly, right? So, we talking about scaling in a trade, right? Number one, this day was horrible. Okay, this was a horrible day to really like kind of trade. But let's say you know where your resistance is at. So, in this case, in this scenario, this is going to be your resistance right here. Right? So, resistance. Okay? So, this yellow line is going to be your resistance. Right? All right. So let's say you are like, I want to enter into a call, right? And then this yellow line is going to be your support. Right? Okay. So, number one, you got to understand the range. All right. So, this is going to be your range, support and resistance. That's your range. Now, what do I always say? Don't take entry in the middle of a range. Take calls above resistance, take puts below resistance, or you take puts at resistance and calls at support. Okay? So, with that being said, right? With that being said, let's say you see a failed 2 down right here. And you're like, okay, I think we about to go up. But you know where resistance is at. So you could do one of two things. You could say, okay, at the break of this failed 2 down, I'm going to enter in, but I'm just going to get a starter position. Okay? I'm just going to get a starter position. Now, depending on your positioning size, that's going to dictate your starter position. Okay? It could be 1 contract. It could be 3. It could be 5. I don't know, right? That's on you. But you enter in a starter position. A good rule of thumb is 30% of average position size. Okay? So, 30% of your average position size. So let's say you usually do 3 cons, just do 1 con. That's your starter, right? Because you want to, just in case we pull back and we go lower, you don't want your full position size to be sacrificed on the pullback, right? But you like, I think we about to go up to resistance, right? Or let's say that we have a failed 2 down and then we open up and then we come down. Then you could get a starter here. And then if we break above here, you could take your full entry and then ride it up to resistance and then you could take your profits. Right? Okay. That's one way you could do it. Or let's say you break above resistance on the 30-minute, but you don't close above it. But you like, I think we about to break out. You could enter into a starter position above resistance. And then if we do come down, you could add to the position, anticipating us going higher if we start to come back up. But in this scenario, that wouldn't really have been smart. You would have wanted to just wait until we close above it on a 30-minute time frame. Right? But depending on the market structure and where we're at in the intraday, right? It makes sense sometimes to get starter positions. Or let's say, let's go down to the 5. Let's go down to the 5. All right. So this is yesterday. This is Thursday. Right. Okay. So, perfect example. Right here, right? So we got this first 30-minute candle right here. So we blast it off, right? And then we pull back. So here's what you could have done. Let's say here, and then we broke above this on the 2. You could have entered into a starter position right here. And then we pulled back, right? Oh, but you could have entered in at your full size down here once you saw it bounce and start to come up. And then the other 70% of your position size entered in right here and then got in on this retracement back to the upside. So that way, if you get starters and you break above this level and then we start to reject and come down, what's going to happen is we bounce there. Now, if you add, even though you're down, you'll be able to be in profit if you come back up to where you entered in at, right? But if you go your full position size at the breaker here and you go up and then you come down and then you get back there, you might be at break even or you might be at a little bit less because of the theta, right? So entering in the starters makes sense because if a pullback does happen, if we're not above resistance, right, and you're in the calls, then it could pull back before it does go above resistance and go higher. All right? Let me know if that makes sense, y'all. Let me know if that makes sense. Lewis, yeah, get a cash account. I don't know what brokerage you have, but just make it a cash account and not a margin account. Okay? Now, starter positions also allow you to expose yourself to that move and that trade without having to have all of the risk. Okay? So, yeah, y'all. Yeah, I like starters. And you know, throughout the day, when I'm trading, I may get a starter and I'm like, because sometimes stocks don't pull back, right? So let's say I get a starter position and then it runs up 50%. I could take profits. 50% on a smaller position size is still better than going full size, it coming up and then rejecting and then it pulling back and now I'm down 20, 30, 40%. Right? Or let's say I go light and I do a starter and then we do come down, but I see that we're coming down to a fair value gap and we're retesting. You always want to add at the retest, right, of a fair value gap as we're going up. So if we have a fail to down at a fair value gap on a 5-minute and we start coming up, that's where you can add to your position, right? Especially if the setup off of the daily time frame is a bullish setup. So if we start coming down after we made a strong move to the upside, but the market sentiment is bullish and you know that we're going to be coming to the upside, then when it pulls back, that's where you add to your position at. Or you just wait for that pullback and you take your full entry right there. Okay? So that's scaling into your trade. That's scaling into your position. Right? That's scaling into it. Okay? Now, what about scaling out of it? If you only have one contract, it's not the time. Okay? If you got 2 contracts, you can, but I would say at least like 5 contracts, right? And it also depends on your position size, right? And what type of move are you expecting? That's a big thing. What type of move are you expecting the stock to make? Right? So that's gain, add to your position at the retest during the first. Yep. And see, this is the thing, Numar, right? A lot of people, they left when we was talking about cars and stuff like that, right? But it's like the people that stay on my lives, they always gonna get blessed. You see what I'm saying? You always gonna get blessed when you rocking with me, because just because we talk about something random, it don't mean that we ain't gonna be on point. It don't mean that I'm gonna forget about what we supposed to be talking about. I'ma always handle business, right? I'ma always handle business. We always gonna handle, I'ma always make sure you guys get what you came here for. But in the meantime, sometimes when you going somewhere, you gonna chop it up about some, you know what I'm saying? It's like y'all cousins. You know what I'm saying? We just be chopping it up. You know what I'm saying? So yeah. So you always gonna get blessed. I know sometimes we may talk about some other stuff or we may go on a rant for 15, 20 minutes, but when you stay rocking, you gonna get the game that you're looking for. All right? So exactly, double R. We need more chats like this. Very informative. I appreciate that, Sherry. Yeah. How long y'all be in a trade, it does matter as well, right? Always, that's without a doubt. Hey, I appreciate that, Ash. Either way, you are challenged. Exactly, Asar. Yep, Casey. Yeah, hey, y'all hear what Mark Quinn said? He said, y'all my smart, rich cousins. You know what I mean? Real talk. Hey, you righty, Kiche. I can't even be mad at that. What's the cheapest contract you bought for IWM? Like $10? You know what I'm saying? Like $10. We had somebody in the Discord. Got a contract for $4 and turned it to 22. I'm gonna show y'all. He said, how you split the screens? You go up right here. Right? And then you could do this amount of screens, right? You could do 2, right? You could do 1, right? Just like that. Okay. So we chopping it up. That's what it is. Exactly, Ikiche. So look at so somebody she turned this money into a crazy amount. Let me see. Where the profits at? Let me find it. This was on, I think it was Thursday. Yeah, it was on Thursday. She went crazy. So March 20th. So watch this, y'all. $40. Here we go. Right here. Y'all see this? Y'all see this right here? She got a contract for $4. $4. And she turned it into $22. That was 450%. 450%. So if she would have just got $100 worth of contracts, right? For $100, she would have got like 500 profit, right? Because each contract was $22. So that's like 20, 25 contracts, like 20, 25, 26 contracts, right? She would have went crazy on this right here. So that's the cheapest I've seen is $4. All right. I think Cortez turned out 38. Yep, he did too. Yep. Yeah, we got people that didn't turn $30 into 300. We didn't done that so many times. It happens every day with IWM. It happens every day with IWM. All right. I appreciate that, Phoenix Flower. All right. So that's what we mean when we say, you know, scaling into trades and scaling out of trades. All right. So same thing is going to go for your scaling out of trades, right? So let's say, let's say you got, you know, your full position size. Okay. Let's say you got your full position size. So let's say you took this entry right here. All right. Let's say you took this entry right here. Okay, right here. You took entry right here. Let's say you went full size because you saw that we closed above resistance. Okay, so you went full size right here. Now, first thing you need to know where your resistance is at. So at the time on the 30-minute, there was an order block right here. So this would be the price target. Okay. This would be the price target. Okay. So from 246 to 248.58, right? So now you see we got this level right here at 247, right? So let's say your full size is 10 contracts. So you took entry right here and we got 10 contracts. Okay. So let's say from here to here, you up 80%. Okay. 10 contracts. Let's say each contract was $50. You got $500 in the trade and you up 80%. You up $400 in profit, right? Okay. So what I would do is I would say, okay, we still got room, but I'm up 80% right here. Let me sell out of eight contracts. Okay. And then let me see how far, if we could come hit this target. And then obviously we did, right? And then when we hit this target, if you see we got momentum, you might say, hey, I'm going to sell one. And then I'm going to see what this runner will do. Okay. So when you sell 8, right here, you're going to have 2 runners. All right. You're going to have 2 runners. And they're going to run up here to this target. And if it got momentum, then you can sell 1. And then see how hard we go. That 1 runner, boom. Now, this is not always the case though. Okay? This is not always the case. So obviously, you guys need to know when to take full profit and you need to know when to be able to, let things go and let things run. Because we just broke above this resistance level, this made sense to do it that way, right? Because we had broke above resistance that we was rejecting 1, 2, 3, 4 times. So we finally broke above it and we created a new high a day. So we came down, tested the high a day basically, and then we blasted off. All right. So that's how I would do it when I'm saying scaling out of contracts. Okay. Ikiche, he turned 8,000 at 16. Oh, that's a double up for sure. You guys share them profits, dog. Said, bro, I never heard of the strat method before you. Never heard of the strat until I joined one of your lives. Hey, I hope it's helping you. I hope it's helping you. Stay focused, take in all this giving game freely, appreciative game. Not for sure. I am back said Charlie does not like psychology, for real. Facts, Travis. I never buy those cheap out of the money contracts because the one time I tried it was wrong. Well, just don't put up more money than you're willing to lose. You know what I'm saying? Getting Lux Algo today. How do I get TradingView? Get it on TradingView. I'm not good. Tech people. You just have to follow the prompts. You will log in to your your Lux Algo. You'll connect it to TradingView, and then you just if you're in the Discord, then it's already. I have a whole video on it, y'all. All right, go watch my video on order blocks. All right, I was in my car Friday morning. My husband was driving, and on the phone, I bought an IWM contract for $12 and sold it quickly for $25. That's a crazy double up. Them trail stops work great. The only thing about trailing stops is they are, you can't really do them like you. Thinkorswim has the best trailing stop losses, right? Webull, you have to do it manually. I don't know about Robinhood. Chart, knowing the exit on time. Just follow price action. I would say follow the charts on TradingView, bro, on Nissan. Why you not get out of the trade completely or hold completely? So Chris, I explained that you got to know your resistance levels and where a stock is going to go to. Okay. You got to know where a stock is going to go to know if you should take the profits or leave some runners. You know what I'm saying? So that's scaling in your trades and scaling out of your trades. A trailing stop is basically like if I'm up 100%, I can say, hey, if I drop down 15%, take me out in profit at 85%. But if I go up to 150% and I come down 15%, now I'm going to be up 135%, right? So it's a stop loss that moves as the stock goes up, and you get to set how low it can go, right? But Webull has manual trailing stops. You have to adjust it manually, but Thinkorswim has the best automatic trailing stops. Right? So you could do on Webull, you could do an automatic take profit of 20% if you want. You know what I'm saying? You can. Casey, you can do it on Webull. I will be 78 this year. Some of you here may be older. Yeah. You don't scale out of one contract. You just get out fully of that full position. All right. Oh, where do you move it on the chart? It's on desktop. So you got to do it on desktop. Okay. So when you're in the trade on desktop, then you can just move it up and down. TOS. Yeah. Thinkorswim has the best automatic trailing stop loss. Theirs is goated. Thinkorswim is goated when it comes to trailing stop losses. Every other platform can't. So if you're like day trading or like swing trading, Thinkorswim is great for trailing stops. I love Thinkorswim for trailing stops. Right? So every brokerage is gonna have they strong points and they weak points. You know what I'm saying? So yeah, y'all. So was this helpful today, y'all? Let me know. Let me know if today was helpful for y'all. Let me know. Let me know if this helped y'all out, man. If y'all got some, if y'all got some gems and some wisdom for this, let me know. So yeah. Rep for the wisdom, the bunny trails, all of it, for sure. Said very helpful. Yeah, option. Use Thinkorswim. Helpful, especially options chain. Here we go. Much love to you. So appreciate that, Davida. Appreciate it, Ash. Appreciate the option strike. Asor, appreciate it. Love to hear it, Joy. Jay Skrilla will definitely be watching. There we go. I had to attend a family, so missed some. We'll rewatch after this finishes. Appreciate it, Pam. This is completely helpful. There we go, Kelton. Mark Quinn, he said you was right, bro. This info fills gaps. Hey, I appreciate that, Mark Quinn. Real talk. ATR tips were golden. Yeah. What's up, Nico? I ain't seen your name in a while. Hey, listen, y'all. If y'all are not, man, come join the Discord. Come trade with us. All right? Come trade with us. Come find come join a trading home, right? A trading community. Come rock with us. Because I'm telling you, we just getting started. We got some very good stuff on the way. And we the healthiest and the wealthiest community in the game. All right? Appreciate that, Davida. Nassan absolutely had to clock in and get this knowledge. Nah, for sure. I appreciate you, Joy. Real talk. Real talk. Trailing stops on options. Yes, sir. Super sharp. Exactly. Yeah, trading at 78 is something powerful right there. All right. So listen. Now, when I get that caddy, I might share the journey of me fixing it up. You know what I'm saying? I might share the journey of me fixing it up because that's gonna be something dope that I'm gonna do. You know what I'm saying? But I'm gonna get that caddy. You know what I'm saying? We're gonna fix that thing up. Y'all remember Pimp My Ride? I know y'all remember Pimp My Ride with Exhibit. You know what I'm saying? I know y'all remember Pimp My Ride with Exhibit. Yeah, hey, the method, Nissan, that strat method is the one. I did not trade yesterday. I said that earlier in this live too. I did not trade yesterday. Watch from my iMac to my iPhone in the work. Trying to follow y'all, talking worth. Okay. How can I protect my runners if I'm scaling out of a position? I'm not using a stop loss. You just gotta manage it. You know what I'm saying? You just gotta look at the charts. If you're not on Thinkorswim, you just gotta manage it manually. Definitely appreciate you, bro. I learned a lot since joining. I appreciate that, Jay Skrilla, Country Skrilla. It's been a month. My wins. Truly locked in. Let's go. Let's go. All right. Yeah, we done, bro. It's been 2 hours and 12 minutes. You know what I'm saying? I got a Saturday, dog. I got a life. You know what I'm saying? I got a life. You know what I'm saying? Yeah. I got a life, man. Hey, look, y'all want me on YouTube 8 hours a day, huh? hey, Kiara, for real, she said they put CAT scans in the trunk. Right. They had X-ray machines. They be like, hey, come in this van right here, and you get a whole X-ray in the van. For real. Straight up, Mark Quinn. Straight up. Once you get there with the caddy, I can return the favor for helping. I'm a mechanic with 20 years. Oh, okay. Hey, Adam, I'm gonna have you come out here and work on the caddy. I'm gonna be like, hey, man, hey, come fly out here to Houston, man. Come work on the caddy. Nah, DeVille sedan, 4-door. I don't like old school coupes like that. You know what I'm saying? Appreciate it, Chandra. Gotta get out and enjoy. Exactly. I love to hear KP. Tomorrow, y'all know we got the live for the watch list, y'all. So we gonna go live tomorrow again. You know what I'm saying? I know, right, Chris? That's what they want. That's what they want. So I know I do gotta go get some more IWM juice. You know what I'm saying? So yeah, man. So y'all have a great day, man. Can you speak on levels, zones, time frame, man? We gotta do another one, bro. We gotta do another one. She said, I need you standing over my shoulder when I Hey, don't do nothing stupid, Casey. I'm gonna be right there like, come on now. The whole world depending on you. You know what I'm saying? Listen, everything gonna be good, y'all. All right. So listen, If you guys are not, man, come join the Prosperity Collective. Come trade with us. Come get money with us. Come change your life with us. Come have fun with us. Come clown with us. Come joke with us. Come laugh with us. All right? I hope that all of y'all have a great day. Have a great weekend, man. I'm going to holler at you guys on tomorrow's live as well. All right? So like I always say, right? Make sure you get up out your head. Go get into this world because your head is a dangerous place to live. All right? And also remember, the more you study, the less you worry. All right? Ooh, that's a good idea, Ed. He said, paint the caddy pomegranate. Ooh, I like that. I like that a lot. I'm going to keep that one in mind right there. All right? But yeah, y'all rewatch this, man. Do what you got to do, and I'm going to holler at y'all on the flip side, man. All of y'all stay smooth, man. Peace.